this webinar is informational webinar. It's an educational webinar. It's not a trading or investment recommendation. So before making any decision based on the information shared, please check with your financial advisor. Right. So very volatile week. We all know the kind of swings that we had. 4 days, successive days of decline. Today, finally, we saw some respite, when it comes to the index, but still we've lost around 1.5% each for both Nifty and Sensex. The sectoral move clearly indicating the kind of trend that we had. So all sectors were in red, wherein IT, post the numbers from the IT majors, faced the maximum heat with decline of nearly 5%. Then realty, pharma, banking, financial services all ended in red. Talking about gainers, some of the stocks from the Nifty 50 basket, which could outshine during this downturn: Bharti Airtel, Maruti, ONGC, Hindalco, Power Grid. Adani Enterprises, Tata Motors, Hero MotoCo, Infosys, LTIM, they were the losers during the week. Now, let's jump directly to what we are anticipating in index now. So as of now, if you remember that, we were discussing about this broadening formation, which index was trading in. We talked about that 22,700, 800 being a tough hurdle. But earlier also we had these kinds of retracement in the market. As you can see that in March month, we had these retracement, and similar in February and prior to that also. But this time around, within this broadening formation, there was a trend line support, a channel support, which we breached in today's session, though by the end of the day, we have ended above the same. So what this indicates that, see, the last 4-5 months is not a very decisive uptrend for the market, for the index, because this sharp up move, usually when we have anything which goes with strong momentum initially, eventually it loses momentum, and that is what we are seeing in the market. So after this sharp up move, now we are seeing gradual up move in the market, with every surge attracting profit taking or a decline. So we were trading in this channel. We breached this channel intraday for brief. On the closing basis, we could manage to hold the same. But the kind of volatility that we are seeing now, that clearly indicates that one should be cautious in the market like this. Earlier, the key reasons were, we were seeing profit taking in the US markets, which started, bothering us and weighing on the sentiments, followed by this heightened geopolitical tension. And now the earning is also not supporting. So all three factors basically are adding to this negativity. And what charts are indicating now, though it's a day of relief for us on Friday, that market rebounded strongly on Friday, but a single day rebound is not enough to change the tone. In the past instances also, when we had recovery, it's like, this is the first day of rebound followed by a negative day, then again a day of recovery, again a red day. So this kind of move, it might continue ahead also. So what as a trader we should do is, first, we should stick only with sectors or stocks which are showing consistent outperformance. Sectors like metal, sectors like auto, selectively in banking space also, like we have certain names which are doing well, especially the private banking majors, they are definitely reading under pressure, but still, yes, we have certain names which are holding strong. We have seen recovery before numbers in SDFC as well. So it's going to be again a tough week, is what charts are indicating. Considering the overall market sentiment as well. So first hurdle, the 20 EMA, which is close to around this yellow line, as you can see, faded yellow line around 22,300, and then 22,700 is going to be the next major hurdle for the market. So if we have to witness any recovery, so if one level that one should keep an eye on is 22,300 as a make or break. Until we reclaim 22,300, the tone is likely to remain negative, sideways to negative, with potential to retest this 100 EMA. And just see that last time when we tested 100 EMA, it's been long back, almost 7-8 months ago. This green line that you can see. So 100 EMA is still looks possible, considering the overall negativity that is surrounding us. But if we break, then basically this entire zone, this lower band of this broadening formation and this 100 EMA, it's largely coinciding around the same level, this 21,500 to 21,700 zone. So this is going to be the strong support zone for the next week. So just to sum it up, what I've shared, that despite this rebound, we are not out of woods yet. For trend to strengthen or recovery to strengthen, 22,300, that is something that one should keep a close eye on. Once we stabilize of that, then yes, this volatility is likely to subside and index might again inch toward the upper band. If we don't, then possibility of retesting 100 EMA seems high. Next, banking. So in today's session, banking was the hero, because as you can see, 1% kind of gain, a very sharp green candle. But this kind of swings in banking is also not very normal. Like from 46,500 to 49, and then again to 46,400, 500 zone. So it's though it seems like that we are forming higher lows, so it's an uptrend, but it's very difficult to trade such volatile swings. And with earning season, with the beginning of the earning season, and SDFC numbers, supposed to announce the numbers next day on Saturday. So obviously it's going to be a volatile week in the next week as well. This green line, as you can see, in last 3 occasions, banking index has respected that zone, which coincides around 46,500. If we break, then 45,500, the long-term averages. Upside, if we look at the previous resistance, first the trendline hurdle and this previous swing high, closer to around 48,200, 48,700, that will be the zone where Nifty would be facing resistance. Bank Nifty would be facing resistance. So anyways, volatility is high, and if we look at something which is anyways witnesses more volatile swings, at least on the index front, it's prudent to limit your naked long positions, especially in banking during this rebound. So let it stabilize, form some base, stabilize above, let's say, 48,000 mark. Then one can think about trading index. In the meanwhile, stay stock specific. Now, let's talk about some of these stocks which should be on your radar. So on the stock specific front, interestingly, that still we are getting or seeing strong moves, be it in the mid cap segment, large mid cap, or large cap segment. The first name that we have on the list is Amara Raja Batteries. The symbol is ARENM. A multi-year high. This, this is a monthly chart, by the way. It's not a daily or a weekly chart. It's a monthly chart. A retest of the previous record high, and now finally after 2015, after 9 years, the stock has surpassed this previous high with very strong volumes, and that too after forming a base around the record high zone. So Amaraja Battery is one such stock. Despite all the negativity, one can look for accumulation, because usually, what we see that yes, there could be a bit of a consolidation due to the market correction and results and other factors which might continue to induce some volatility. But reclaiming record high after 9 years is definitely big achievement for any stock or index. So usually we see the continuation of the move. This is one stock that should be on your radar in the coming week for accumulation. Next, Havells, we have discussed about this stock earlier also. Again, why we are discussing that in a market like this, wherein we are seeing volatile swing, this stock is taking its own time consolidating around its record high. So it clearly shows that when the market goes bad, it goes into a consolidation phase, witness very narrow range moves, and then it breaks out. So after this breakout, this range breakout, last 5-8 weeks, we are seeing this narrow range pause. So again, it seems like an opportunity to accumulate in case if we missed the chance earlier. So Havells, another stock apart from Amaraja, which looks positive to us. Lastly on the list, Jubilant Food, a consistent underperformer from the F&O basket, witnessing steady decline. So as you can see, it's a clear decline that we were seeing in the stock. This zone from the last 4 or 5 weeks, we were seeing a bit of consolidation, but this week decline has again made it clear that this negativity is here to stay, and then we might retest this support line on the weekly charts around, let's say, this 410, 415 zone, and maybe lower. Since markets are still volatile, we are still seeing erratic swings across the board. Maintaining few shorts apart from the long trades is something which is prudent strategy. Also, another way to hedge your position is by buying index puts. If you are holding, let's say, index majors, any Nifty of 50 counters, then you can hedge through index puts also. So this is all from the presentation part. So just to sum it up, both the indices, volatility is something which is common. Tone still negative, especially for the Nifty. Banking looks comparatively better, but highly volatile. That's why we are refraining from aggressive long in banking for a time being now. But for the Nifty 22,300, that's the make or break area. If we manage to hold that zone, then this volatility, negativity might subside and will inch toward 22,700 zone ahead. Otherwise, the profit taking would resume, and 26,600, 26,500 zone would be the area where it might test. For banking, 4,900 is the critical resistance zone. So, plus we have SDFC number also, so we will see the reaction. Accordingly, that will set the tone. Meanwhile, stay stock specific. Amaraja Battery, Havells, some of the candidates which one can look for accumulation, while Jubilant Food is something that one can look for short trade. So yes, this is all from the presentation part. Let's have a quick feedback and then we can start with the Q&A. So please quickly fill your feedback and then you can start posting your questions. Please fill this feedback quickly so that we can start with the Q&A. And if you're done, you can start using that Q&A tab and start posting your questions. All right, so almost done. Okay, so again, I'll request to please stick with your questions. See, this webinar we plan to share uh, information related to the overall picture that what we are seeing in the market. Stock specific is something that we avoid answering so that we can talk more about the broader perspective, like the key sectors that one should look at, what we are seeing in the key indices. So based on that, we'll take the first question from Mr. Deepak Kumar, that our view on IT and banking. So banking we've already shared. We'll talk about IT. So Deepak, the challenging part is that we were anticipating a bit of a breather in the IT, pack with the beginning of the earning season, but it turned out to be otherwise. We are still seeing the IT majors feeling the pressure, though today was a day where select IT majors were seeing some recovery, but as the index, the IT index, is still among the top losers. So for a time being, I feel that IT is something that one should refrain if you're planning any short-term trades. Metal, auto, they are the top two strong sectors which we feel in case if somebody is looking for long trades. Rest will continue to witness the mixed swings. So avoid IT for a time being. Okay, so we have a couple of questions related to metal stocks. So I'll answer in a way that it answers your query also, but at the same time helps the other also to understand what's going on, because as I've said, that two sectors, metal and auto, we are bullish on. And despite all the negativity, some of these stocks, especially a stock like Vedanta, Jindal Steel, uh, Hind Zinc, they are witnessing a dream run. Means almost a vertical up move. But now there's a possibility that they might take a breather, and stocks which are gradual movers. So stock like SAIL, stock like National Aluminium, Tata Steel, NMDC, all these stocks might gain some traction. So please avoid chasing stocks which are already witnessing strong momentum until you are very disciplined about your stop losses. Okay, so hope it answers your query. And so we have a query from Sangam Mishra that I want to learn more about investing. So investing, Sangam, to start with, I feel going through the route which is uh, less volatile, or as you can say that it helps you to understand how the market works, is through SIPs. So be it through stock SIPs, through ETFs or mutual fund, that's the right way to start. Because if I'll say that go and check any tutorials, it's not going to help you to make any develop the understanding about investments. So start with a very small amount, um, which can be as low as 500. Every month you start investing in Nifty ETF, and then gradually you'll understand how the market works. Otherwise, there are several books and other things which are available online and offline. But the best way to learn markets investment is through by making any investment. So first, passive investment through ETF route, then you can gradually graduate to stocks as well. Okay, Mr. Ajay Gupta. Okay, sir, metal is still in uptrend. Yes, metal is still in uptrend and it looks comparatively better. I believe that, despite all this global turmoil, I feel that in case if there will be any correction in the metal stocks, it should be utilized to accumulate them, because we still have more legs to the overall uptrend in the metal space. Okay, next question from Mr. Kunal, that is it a good time to restructure the portfolio before the election results, and what are the sectors to look out for post results? So I feel that it's a very short-term approach, Mr. Kunal. If you are an investor, means before election and after election. So I'm sure that you have not made any investment based on the election outcome. And if that is the case, then it's a different story. It means it's not an investment, it's short-term bet that you are taking. And since it's already discounted, is what the kind of move that we've already seen in the market, a steady uptrend. It's already discounted that the prevailing government might come into the power again. So I feel that just because that the general election has started, one should not liquidate their portfolio. Instead, you should start looking at the numbers. Means what all stocks that you have in your portfolio, they have started announcing their numbers, their quarterly numbers. If you are associated with us, you can ask us to help you with how your portfolio looks like, and we'll help you with whether you want need restructuring or not. Else, just look at the numbers, how the companies are performing, what the management are saying, and then decide on that, not based on this election outcome. Okay, so Mr. Varun Kumar says that, sir, please teach us how to pick a good stock, when to enter and exit. So, Mr. Varun, we'll definitely plan, if you'll go back and see our earlier webinars in past at Religare Online YouTube channel, you'll find videos wherein we talked about moving averages, how to utilize that, and risk management and other aspects. But how to pick is very difficult to do it in a one webinar or two webinar. It takes a base building first. But yes, if you'll go back and see those webinars, at least you'll be able to differentiate what you should not buy. Means if the stocks are below their major averages, long-term averages, then this is something that you should avoid. So I'm sure that if you'll go back and see those videos, it will help you to filter out the techniques. And maybe in future we'll definitely plan a series so that we can guide how to look for good trading bets and look for the entry and exit point as well. So Rajni these are not recommendation, as I have mentioned at the beginning of the webinar. This webinar is open for all. It's not only for the clients. So this is for the educational purpose. If you are associated with us, obviously you'll be receiving recommendations day in, day out on our app. So it's not a trading or investment recommendation. It's completely on the discretionary of the person who is attending this webinar, that whether they want to go ahead with it or not. The recommendation or the ideas that we share on our platform, it's completely with a clear entry and exit points. So that is something which is completely different. So one should not confuse this educational video with the recommendation. Mr. Feroz, we've talked about Nifty in detail. So this webinar is available on YouTube also, the recording. So please just check. We have discussed about Nifty in detail. What are the levels that you should be focusing, and other things as well. Okay. Next, Mr. Ajay is on power sector. Yes, power stocks are also doing well, and we are still seeing consistency in the trend, but the momentum is something which is missing if you exclude a couple of names from that space. So trend is still up, but if you are planning any trades fresh, I can't recollect other than Tata Power if there is any other name that is witnessing steady uptrend. So one should be very specific when we are timing, when we are trading. So within the power space, I feel it's time for consolidation. Okay, so again, Rajni had asked about which auto stocks. So again, we've talked about the sector. We are not recommending any stock here, but among the top names, comparatively better structure that we have is of M&M, because this stock has not participated in the decline. In fact, it is among the top gainers also in today's session. And then we have Maruti, which is holding strong. Eicher. So Escorts, after 2-3 months of underperformance. So these are some of these stocks which can be considered within the auto basket. Okay, Mr. Dinesh Kumar has this question, which is different from the topic that we cover, equities. It's about gold. So, Dinesh ji, though we avoid, talking about something which is not the part of the discussion, but still, as I understand that the kind of move that we are seeing in gold, still, we feel that there's more up move left in gold due to multiple reasons, and gold should be the part of anybody's investor's portfolio depending upon the risk appetite. So let's say if you are a risk averse investor who feels that I'm okay with moderate risk, then at least 10% to 20% should be in gold. So, but is it the correct time? I feel the good way to invest in gold is through gold bonds, souvenir gold bonds, or through ETFs. So physical investment at this level, I'm not sure of. But yes, since you can accumulate ETFs and other bonds, is the right strategy, it feels. Okay, Mr. Vityagi on FMCG sector. So FMCG is not performing. So just like IT, this sector is struggling. The top performer, the top names in the sectors, they are also dealing under pressure. From 1 year down the line, yes, situation is likely to improve because we have already seen a very prolonged period of underperformance from the FMCG space. But is it a good time to start buying it right away? I don't think so. Accumulation is going to be the right strategy. So let's say if you are planning to invest 100 rupees, 20-30 rupees, definitely you can invest, and the rest on every 5 to 10% kind of a dip in the stocks, especially the large cap ones. Thank you, Mr. Jitendra, for your feedback. आपका वेबिनार अच्छा लगता है और जिस तरीके से आप क्वेश्चंस का आंसर देते हैं उससे काफी हद तक हेल्प मिलती है. So thank you for the feedback. Okay, so we have largely covered all the queries which were sector specific or index specific. If you are associated with us, definitely you can redirect your queries through your branches, through your business partners. If it is related to any stocks, we are happy to answer. And next week is the week of expiry, the monthly expiry. So obviously we'll have this rollover webinar next week. Though we post a short video of our interaction on our Instagram channel, Religare Broking Instagram channel. during that week as well. It's in Hindi, so if you are okay with that, definitely you can go ahead and watch the same. So thank you everyone for participating. We'll connect next in May 3rd, same time. So till then, take care. Thank you.